Listen, I don't care if the market is hot, cold, warm, up, down, sideways, or doing hula hoops. If I see a pullback entry, I'm going in head first like this, and I'm swimming for profits, okay? I don't want to waste any of your precious time. Let's get into the topic of the video. I'll be discussing the market context, important key levels, the best trades to have taken in 4 different tickers using pullback entries, and my list of trading principles. Without further ado, let's get some Benjis. Let's take a look at the current market context. Actually, before that, it's important to take a look at the economic calendar and see that we have some important news and events coming up this week. So on Wednesday, we have CPI. That'll happen in a pre-market. And then FOMC minutes at 2 p.m. Eastern Time or 11 a.m. Pacific Time. And then on Thursday, we have jobless claims and PPI. So two very important events happening this week. So it's important to keep that in mind. Now, when we look at the market context on a higher time frame, let's look at the SPY ETF, the S&P 500. We can see that yesterday on Monday, it just chopped. It chopped within this range right here. With the market expecting some important news later in the week, it probably was the reason why it chopped like this. And in the pre-market is, chopping within the range as well. You can see, later in the day, it sold off after rejecting this 520 supply level. Yeah, in the pre-market, it's trading and chopping within this range. So at that point, you don't know what it's going to do. All you can do is map out your key levels, examine the price action, and go from there. Let's look at the QQQ, the NASDAQ ETF. Same thing, chopped yesterday, chopped in the pre-market, and then you can see in the morning it on the first hour rejected that 443 supply level and had a huge sell-off the second hour of the day. So that's the current market context. Let's take a look at the trade to take. Every single day, there are multiple opportunities in which you can get in at a pullback entry in multiple stocks and make yourself some money. Let's start with NVIDIA, the trade I took today. Starting with NVIDIA. So this was a trade I took today. It was pretty much picture perfect for me, except that I didn't hold my runner as long as I wanted to. But other than that, yeah, execution was flawless on my end. And as you can see from the title of the video, we're examining pullback entries. And so what happened here was in the pre-market gives us a nice tight consolidation within these two ranges, 875 to 865. And then you can see the first 5-minute candle is a bearish one. And then it's slowly pulling back for the next 20 minutes or so, creating a nice bear flag for us, but also a pullback entry at the EMAs, right? And so once it does that, you want to also examine the SPY and QQQ at the same time. And those two were selling off pretty aggressively to the downside after the pullback. So after it gives me a first, push out of that trend line, and from that pullback, I get in for some shorts, expecting more downside. And I'm setting a tight risk, a few dollars above that candle. And I'm letting the trade work out for me. I have important key levels, some support levels mapped out at 859 and 849, where I said that I kind of regret not leaving a runner and holding my winners longer is because I took out basically all of my position out, when entering the support level because I didn't want to get caught up in a bounce. I was expecting the market to be a little choppy, including some stocks. So, I just wanted to take my scalps, take my money and call it a day. You can see that I missed out on a lot of profits, but as a trader, if you're a real trader, you know that you shouldn't dwell on the fact that you could have made more. You just play your strategy. Maybe I could have held a couple runners down to this level right here, but after that, I'd be asking for too much. So that's NVIDIA on the 5-minute. I'll show you guys a better view, a view that which I look with 3 different time frames. I have the 2-minute on the right side, the 5 minute in the middle, and the 1 hour on the left side. So this is why I had this 859 key level. It was yesterday's support level that it touched before bouncing back up. So I just wanted the stock to reach that level and take my profits. And then if you take a look at the 2 minute, right, you can see that this pullback and this bear flag was a lot cleaner, which is why you want to have multiple time frame. You want to have multiple time frame analysis and confluence. So if it's happening on multiple time frames, it gives you even a better confidence and better incentive to take a trade. So this is where I entered right here, 862.5, and I held it down to 859. And you can see it gives us another pullback right here. At this key level, you could have gotten in right here, set a tight stop for above that level, gives us another pullback, right? And then another pullback down here. So the title of the video is not something that that you should doubt. Pullback entries are timeless, evergreen, golden nuggets that you can implement into your day-to-day trading so that you can make money as well. So I want to show you the premium chart for NVIDIA so you can see how much profits I missed out on, right? I got in for an entry price, premium price of $14.67, right around here. And then, maybe 10 minutes later, I got out for still a nice, premium jump. It's about, $160 of a jump in one contract at 1625. But you can see that it went all the way up to, the 35 level. So let's say you just bought one contract at 1467. That'll be $1,467. And you just held that contract up to here until about 7:30 a.m. PST. You would have made, $2,000 just with one contract, right? So imagine you held 5 contracts. That's $10,000, right? So made a huge jump. Obviously, it's not realistic to expect that kind of jump every day. Maybe you would have got an average exit price of around 25, but still, from 1467 to 25, it's $1,000 per contract. So huge jump in premiums today. These were NVIDIA puts. Let's take a look at SMCI. This is SMCI on the 5-minute chart. Once again, sold off the first 5 minutes. And then it kind of gives us this pullback right here, this trend line. And so once it breaks out of that, you would enter right here at 920. Set a tight stop above these candles as a stop limit, as a stop loss. And you can first take out your partials right here at the approaching this key level at 906. And then you can hold a few runners. Maybe add in, if you missed this entry, you could have got into this entry right here, this pullback right here. Gave us multiple pullbacks and bear flags. So that's SMCI. We'll keep it short and sweet. Let's take a look at Tesla. Tesla on the 5-minute was relatively strong compared to the whole market, right? While the whole market is selling off, Tesla's, gives us that first 5-minute bearish wick candle, but after that, it holds this indicator. This indicator is a daily SMA, the 20 SMA, or the daily SMA, 20-day daily SMA. So holds this, bounces back up while the market is still dropping, and it's showing relative strength. So as the market is still dropping, right, what it does at this key level, remember we want to examine the price action at important key levels. So at 174, what does it do, right? It gives us this doji candle, but for the most part, it's a bullish doji with, a bullish wick. And so what you can do is get in for an entry right here and set your stop loss at 174 and ride the move up, right? Gives us another slight pullback right here. And you could set a tight stop loss below that candle and ride it for the upside. After that, it doesn't really give us much of a good entry. So anything above that would just be a chase. You wouldn't want to enter up here or up here. You want to get down. You want to get an entry down here, right? So that's what happened with Tesla. I'll give you a better view with the multiple time frames. So yeah, that was a 5-minute. So if you take a look at the 2-minute, you can see that with the price action at the key level, shows us a rejection bar, but after it hugely spikes up, breaks that key level, and then holds it, right? Once it holds it, you get in for an entry for longs, and you just let the trade work out, right? Couple pullbacks right here, and with just low volume, it's pretty much just, that's how stocks move. It doesn't just go straight up, right? It gives you a little pullback, consolidates a little bit, and then continues into the trend. So that's the stock Tesla. Let's take a look at the S&P 500 ETF, or the SPY. A lot of people just trade the market. It's all preference. I like to trade the stocks while simultaneously looking at this S&P 500. So if you chose to trade some SPY options, you can see that, for the first couple minutes, it's kind of chopping, gives us a huge bearish wick to the downside, or a bearish candle to the downside, and then it's pulling back right here, right around 519 level. Is consolidating back to the EMA, right? And so once it's pulling back to the 9 EMA, you can get in for a good entry right here. So a tight stop loss, a few candles above that, and then you can see that it gives us a series of, huge bearish 5-minute candles. And so that would have been a huge spike in your premiums. You'd have made a lot of money if you held through that. But what's realistic, right? Where should you set your key target levels? You set your stop loss right here. At this first move down, at the end of this candle, at the end of the first 5 minutes, I would take partials out, and then I would take the rest of my position out at this, or I'll take the next majority of my position out right here as we're approaching 516, because that's where support level is. And then at that point, I would just, let some runners ride, and keep adjusting your trailing stop loss. You don't want to keep the same stop loss you had up here, right? As a move is working out in your favor, you want to make it a riskless, trade in which, you don't let the stock go back all the way to your break-even price. You make sure that you're adjusting your stop loss accordingly, and until it gives us our first sign of weakness. In this case, it will be maybe this arrow this candle right here. You get out for, the rest of your position. So that's the stock ticker SPY. You too can make money on a day-to-day basis using pullback entries, key levels, and overall sticking to your trading principles, in which I'll get to mine in the next segment of the video. No trading the market open, at least 15 minutes. For me, that's 6:45 a.m. For you, you might be in Florida or New York. That will be 9:45 a.m. No trading till then. Keep losses minimal. Set your risk limit when entering a trade and exit when your stop loss is hit. This is a non-negotiable. You must exit without any hesitation, because trading is a business and you need to keep losses low so that you don't lose a lot of money. The next one is mark key important levels and take note of the macro and micro trends. You want to go from a higher time frame down to a lower time frame and mark out your key levels, mark out strong, multiple touch points in which the stock reacted, and then take note of the trends. Is it uptrending in the macro and then downtrending in the micro? Is it consolidating? Has it been choppy the past few weeks? What's the trend doing? Look for clean, strong trend lines with multiple touch points, bear and bull flags, and pullback entries in trending stocks. Avoid choppiness. Pretty self-explanatory. You don't want to chase any moves when the stock is going up or down. You want to get in at a good price, at a good entry, with minimal risk, so that you can take profits when the stock moves in your favor. When the stock already made its move and you're getting in right here, you don't know where your risk limit is and you're getting in at a bad entry. When the stock does this, it'll most likely pull back and you'll be sitting in a lot of drawdown, and if the stock reverses back down, you've essentially lost way too much money, and that's what you deserve for chasing a move, not setting your stop loss, and being greedy. The next one is secure your profits, at least 50 to 75% of your position size. When I say the first leg, it's your first move. It's the first move in which the stock makes the move in your favor. So you want to secure your profits, take some partials out, so that essentially once it moves in your favor, the stock or the trade has been risk-free and there's no way you can lose money on it now. Last but not least, leave runners anywhere from 25 to 50% of your size and set a trailing stop loss after the stock moves in your favor. Once the stock moves in your favor and you set a trailing stop loss, by sticking to it, you essentially make the stock risk-free. There's no way you can lose money on it because the stock already moved in your favor. And so if the stock goes against you and hits that stop loss that you've adjusted, there's no way you can take the L on the trade. That wraps up today's video. Every single day, the stock market provides us food to eat. It's just our obligation and our job to take the food when it's present and when the opportunity is there. Pullback entries and trending stocks can be your bread and butter. And when the market presents one, you need to have a clear head, not be too emotional, and just get into the stock, set your risk limit, and let the trade move in your favor. I aim to make evergreen videos like this as frequently as possible, with a main focus on trading high probability setups and strategies in conjunction with timeless principles. If you appreciate the value that I'm providing you, please don't forget to like and subscribe. I'm wishing you many Benjis in the near future, and take care of yourself.